You're tuned in to Agriculture Today, and we start our Wednesday show continuing to discuss top developments in agricultural law and taxation in 2023. And in to talk about them, we're joined by K-State and Washburn law professor Roger McEowen. Roger, thanks for joining us today.
Thanks for having me.
Roger, we've now entered into your top 10 developments, and today looking at number 10, 9, and 8. And so kicking off with the 10th development, entire commercial wind development ordered removed. And what is that?
Well, this was a big case near the end of 2023, Shelby, where a federal court in Oklahoma ordered the removal of an entire wind energy development, a wind farm, so to speak, 150 megawatt development, and then set a trial for damages. And now this whole problem has been ongoing since 2011. It's the longest running legal battle concerning wind energy in the U.S. And back in 2017, the U.S. Court of Appeals for the 10th Circuit, of which Oklahoma is a part, said that the wind energy company's construction and development constituted mining, and therefore they needed to get a mining lease from a tribal mineral council because this was on tribal land in Oklahoma, and they failed to do so. And then it finally gets, 6 years later into another court to enforce that, and the development company the energy company still hadn't gotten that mining lease yet. And so the court entered permanent injunctive relief for the tribe and ordered ejectment of the wind turbine farm for a continuing trespass.
What does that mean for that company?
Well, they're going to have to tear down 84 towers spread across 8,400 acres of the tallgrass prairie in Oklahoma, and that included leased surface rights and underground lines and overhead transmission lines and all their meteorological towers and access roads. And it's probably going to cost them at or over $300 million to do this. And again, the basis for this was when the 10th Circuit back in 2017 said that their development and excavation work constituted mineral development, and that has to have a federally approved lease when you're developing minerals on tribal land, and they never got one. It's the Osage Nation there that owns the rights to the subsurface minerals that it bought from the Cherokee Nation back in the late 1800s under an act, the Osage Allotment Act. And those mineral rights include the oil, the natural gas, and the rocks that were mined and crushed when this energy company was developing the project. And so it's a really big deal. You can't just ignore these court orders, which the energy company did to their detriment.
And what does this mean for agriculture?
Well, I think it's broader. Yes, this is on agricultural land, and of course, these big wind energy projects do have a very broad footprint on agricultural land, but it's broader than that. I think the broad point here is that energy companies have to pay attention to the law. They have to pay attention to what the courts say. They have to pay attention to property law under state as well as federal law, and you can't just ignore that. And in fact, the court, in its order in the 23 case, said that the public interest in private entities abiding by the law and respecting government sovereignty and the decisions of the courts was paramount, and that their refusal to get a lease constituted interference with the sovereignty of the Osage Nation, and that was sufficient to constitute what the court said was irreparable or irreparable injury.
And Roger, moving on to number 9 of the top 10 now, and this one involving reporting foreign income and a case that goes along with it for a person who had dual citizenship.
Yeah, it deals with reporting foreign bank accounts that exceed a certain threshold level. We can have income from foreign sources, and of course we have to report that in the United States, but there's also another requirement out there that says that if I have a bank account outside the United States that at any point during the year has a balance exceeding $10,000 in a single business day, then because of the terrorist attack over 20 years ago, there's a new law that was put in place, and it dovetails into the Bank Secrecy Act, which actually goes back to 1970, which has other obligations that are imposed on financial institutions in the United States. But what this says is if I have a foreign bank account that has a balance at any point in time over $10,000, I have to report that to the IRS by filing a form with the Financial Crimes Network. It's known as FinCEN Form 114 or an FBAR form. And if I don't do that, I can be penalized rather substantially.
Part of that penalization for this case kind of dealt with whether it should be on a per form or per account basis.
Yeah, that's right. In 2023, we had a case that went all the way to the U.S. Supreme Court, and it involved a dual citizen of Romania and the United States who immigrated to the U.S. in '82, became a U.S. citizen, lived here until 1990, and then went back to Romania. Well, he's got various Romania investments that amount to over $70 million, and actually he had 272 foreign bank accounts that tripped the $10,000 level. And so since he's a dual citizen in the U.S., he's got to file an FBAR for those. And he didn't know about the requirement for the non-U.S. accounts until 2012, and he should have filed for 5 years, and he didn't do that. And when he did initially file the FBARs, he didn't accurately report all of his accounts. So IRS swoops in and said, well, the penalty for you is $2,720,000. We'll buy the fact that you claim that it was a non-willful violation, so we're not going to throw in the criminal penalties and you go to prison. But we're going to fine you $2.72 million. So what they did to come up with that fine was multiply the fine by the number of bank accounts that he had. Well, he argued that no, the fine should be on a per form basis. I have to file one form per year to report all of my accounts, and I failed to do so for 5 years, and that's a $10,000 penalty per form times 5. So $50,000 should be my penalty, not $2.72 million. Goes all the way to the U.S. Supreme Court, and in a very slim majority decision, he wins 5-4, and the penalty is computed on the FBAR filing, not on the account basis. It's on a form basis. So he wins. He still has to pay a fine, but it was only a $50,000 fine instead of $2.72 million.
Roger, what does this mean for agriculture and taxpayers?
Well, in recent decades, we've had more and more farming operations, particularly larger operations, operate in countries in South America, such as Brazil or in Mexico or even in Canada. And if you establish a bank account in those areas and the balance exceeds $10,000 at any point in time, you have this requirement. You must file an FBAR. So if you're not aware of this, you need to talk to your tax professional about this. You don't want to get into the penalties under this.
And our number 8 thing for us to talk about for the 2023 involving corporate reporting requirements and something that was enacted in 2021 but has just come into effect at the beginning of this year.
That's right. The Corporate Transparency Act was enacted on January 1, 2021, and it has a requirement that starts this year, January 1, 2024. I put this in as a 2023 development because if we wait until to be talking about this next year, then it's too late because the reporting requirements are going to occur in 2024. So what is this? This is, again, a requirement that ties into what the government thinks is being able to track individuals that own businesses. It's an anti-money laundering initiative, trying to catch people that are creating shell corporations to avoid tax. And so basically what it is saying is that if you are a business, even though there are a bunch of exemptions, but a lot of those won't apply for our farm and ranch operations. If you have one of the exemptions that might is if you have 20 or more full-time U.S. employees and you report at least $5 million on your latest filed tax return and you have a physical presence in the U.S., then you're exempt. Now that'll catch some of the bigger farming operations. But if you don't meet those criteria, then you've got to file this beneficial ownership information with the government. And you can fall into one of two categories. As an individual who either directly or indirectly exercises substantial control over your business or owns or controls at least 25% of the ownership of the interests of a reporting company. So if you're basically anything other than a sole proprietorship and didn't generate more than $5 million worth of income on your last tax return, you have to report. You have to file one of these forms. And again, this has to be filed with the Financial Crimes Enforcement Network, which is a bureau of the Treasury Department.
And if people do have an entity that does mean an exemption, does that mean all of their entities are exempt?
No, and that's a great question because, let's see, for example, let's say I do have a large farming operation. I'm over the $5 million threshold. Let's say I have a general partnership. But I've got other businesses such as an equipment or a land LLC or some other related entity. Those related entities are going to have to file a report detailing the required beneficial ownership information. Just simply having one large entity is not enough to exempt the other entities.
And for people who are needing to make this filing, what are some of those deadlines?
Well, if you were in existence before 2024 started, then you have to file this information with FinCEN, the Financial Crimes Enforcement Network, by the end of 24. If you are a new business that starts up in 2024, then you have 90 days to report. And then after 2024, you have 30 days.
Roger, if people would like to keep up to date with your top 10 developments in ag law and taxation, how can they do that?
Well, there are a couple of ways. You can go to my website, which is washburnlaw.edu/WALTR, or you can go to the Ag Manager website through the Department of Ag Econ at K-State.
Roger, I appreciate you taking the time to join us today and share with us some information about some top developments in ag law and tax.
Thank you, Shelby.
That was K-State and Washburn law professor Roger McEowen. If you'd like to read the article that talks about 3 of his top 10 developments in agricultural law and taxation in 2023, you can do so by going to agmanager.info, or you can also find it on his website at washburnlaw.edu/WALTR. I will link both of those in today's show notes on agtoday.net, as well as the article if you'd like to go read about these topics.